Holy smokes, everyone. What an absolute wild week it's been this week in the markets. We got huge news, huge economic news, what's really happening in the US economy. We saw lots of volatility in the markets on Friday, and we've got so much to cover what's really going on with the US financial system. And in today's video, we're going to talk a lot about gold because we know Elon Musk is calling for an audit of Fort Knox. We're seeing more calls for the audit on the Bank of England's gold reserves. We're seeing big price differences between the US exchanges and the London exchanges. And really, what I think we're seeing right now is a gold run for real physical gold, because we all know there's been a lot of suspicion with these paper gold ETFs. Do they really have the gold? Is the gold really there? Well, I think we're about to find out very, very soon. And what we're seeing around the world with fiat currencies besides the US dollar, because that's the best fiat currency in a bad neighborhood of bad money, that is holding up well. But we're seeing a lot of other currencies crash, and we're seeing people flood for real money, and that is gold and silver. So everyone, we have a lot to cover in today's video, so let's not waste any time. Let's get straight into the news, the facts, and the data. Well, okay, first things first is this, everyone. We're going to go over what happened in the markets this week. Now, on Friday, it did finish on a sour note, but more importantly, we got to know, why did it fall so much? So the Dow dropped 700 points for the worst day of 2025 so far on new fears about economic growth. So what are we facing, everybody? Stagflation. That is where you have weak economic growth, but you still have rampant inflation, because we got the CPI report this week as well. And the CPI, the Consumer Price Index, month over month was up 0.5%. That means you have official inflation going up more than 6% per annum. But we all know real inflation is much higher than that, but they simply can't hide the real inflation any longer. And this is what I tried to warn about the Federal Reserve, that they're cutting interest rates too early and they risk reigniting inflation. And when you throw tariffs on top of this, if Doge does go ahead and give out the stimulus checks, which I don't think they will do, I think what a lot more people really want is they want tax cuts, or they just want a lower tax rate rather than getting a big stimulus check. Or I doubt they'll get 5,000. That's only if they cut 2 trillion, which they definitely won't be able to do, even though they should. They just won't have the political will to cut that much. But instead of getting these stimulus checks and it's a one-off payment, and you won't benefit from it anymore, people want real tax structural change. So let's get into this report to see, why is the economy doing so bad. Let's dive a bit deeper, everyone. So losses intensified into the close as traders feared staying long into a weekend that could bring another barrage of headlines from the Trump administration, which has proposed a flurry of tariffs and other market-moving policy changes since taking charge a month ago. So yes, tariffs will be inflationary, because we're going to see a lot of these businesses pass this on the consumer, but it's going to take a while. It'll take a while for us to see the real impact, because with this data, it's not okay, they introduce a tariff and then next week we'll have data on how it's impacting. It could take at least 6 to 12 months to see the real impact on inflation with these tariffs. So we got a bunch of data that raised new concerns about the economy and sent investors into bonds, which caused yields to tumble. Now, this was one of the first indicators. The University of Michigan's Consumer Sentiment Index crashed to 64.7 in February. That's a decline of 10%, and a steeper drop than expected as consumers raised concerns about higher inflation ahead from possible new tariffs. And we did get that data, like I said earlier, that the CPI is increasing and increasing massively. Another big headline is what's happening with the price of eggs. Price of eggs are skyrocketing out of control. Here in Australia, when you go buy a carton of eggs, you're lucky to find a dozen eggs for under $7. The 5-year inflation outlook in the survey was 3.5%. Now, this is the high since 1995. On top of that, existing home sales in the US fell more than expected last month to 4.06 million units. And why is that happening? Well, it's simply happening because of interest rates. Not only have house prices gone up so much, but it's pretty much you're paying 3 times the amount in interest, and nobody in many major economies, unless you're a very, very high earner or have your own business and doing very, very well, can afford a house anymore. The US Service Purchasing Managers Index also dropped into contraction territory for February, according to S&P. So businesses aren't purchasing new goods, which shows a huge sign of weakness. Now, Walmart fell 2.5%, making a second day of declines after the company issued a weaker than expected forecast that also soured the outlook for the consumer and the economy. Because we all know Walmart is huge, it's a huge staple in the US economy. If people can't afford Walmart, if people can't afford to shop there, you know the economy's in real trouble. Now, we saw another headline here from Bloomberg. Hard to shock markets show tolerance for trouble isn't limitless. That's right, because we've seen markets just continuing to go up and up and up, no matter the risks. But eventually, the risks get too great. The price to earnings ratio for the S&P 500. I'm not talking about the entire stock market, because what people really have to know is the Magnificent Seven is really making up the majority of the gains in the stock market. So I'm not saying all stocks are overvalued, but we're seeing the big tech stocks, they are the ones that are significantly overvalued, and they're taking up more and more market share of the S&P 500 and the Nasdaq. So really, if you're thinking you're diversified by buying the S&P 500, the S&P 500 is a lot less diversified than it used to be. So I said weak US economic data on Friday puts bulls in retreat, and a resilient economy, low volatility has propped up assets. So those are the big risks the US economy and the markets are facing right now. But what we're all seeing is gold is skyrocketing and it's going up massively. Gold is up 45% over the past year in the US. It's up even more in other currencies like the Australian dollar. We're seeing a huge flock to gold. And are we seeing a physical gold run happen right now? Well, look at this, everyone. Why banks are flying gold bars on commercial flights from London to New York City? Well, let's dive a bit deeper. So Trump plans to impose tariffs on U.S. trading partners, including reciprocal tariffs regime that's expected to be formalized by early April, and tariffs on European Union, he hasn't yet detailed, has spurred banks to relocate their gold reserves. That move has been driven by a price differential between gold sold in London and New York. And the Wall Street Journal reported last week that the price of gold per troy ounce has been roughly $20 lower in London since early December. And London is a main trading location for the physical gold market, while New York is a hub for future contracts. So, everyone, is the gold there in the Bank of England vault? I think another audit needs to be done very, very soon. So, the amount of gold being flown across the Atlantic on commercial airlines is significant. JP Morgan said in the filing with CME Group's comments that it plans to move about $4 billion in gold from London to New York in February. Could this also because they need to get gold and shuffle it and relocate it between London and New York for that Fort Knox audit that's going to be coming? I think that's a real possibility. And like I said, gold futures were trading around $2,950 on Thursday and Friday, and up 10% in 2025 to date, and over 44% from a year ago. So, everyone, if you think I'm just doom and gloom on this channel, no, I've been warning about this. So I've been saying gold and Bitcoin is going to massively outperform stocks, or should I say the S&P 500. And I've also been saying there's a lot of opportunity in commodities companies, because once gold continues to surge above the $3,000 per ounce, people are going to say, hey, I missed out on a gold run, and they're going to go into more other speculative assets like miners. So again, like I've been talking about, Musk and Trump are questioning, is the gold really there? So let's go into some key facts of what we know. So beginning Saturday, Musk shared several social media posts questioning the state of the government's infamous gold reserves at Fort Knox, asking if the gold is still there or gone, and calling for a live video walkthrough of the facility. Now, Senator Ron Paul responded, let's do it. It's one of Musk's posts calling for annual audits of Fort Knox. Now, Trump joined the discourse late Wednesday, telling reporters, we hope everything's fine with Fort Knox, but we're going to go to Fort Knox to make sure the gold is there. He said, if the gold isn't there, we're going to be very upset. And I think that's an understatement. I think there needs to be more and more investigation if the gold's not there and figure out who stole it. So there's no evidence to support theories about missing gold, but the state of the reserve is tightly sealed. Well, if you want to, stop the rumors, just let them go ahead and audit it. The US bullion depository in Fort Knox holds 147 million troy ounces of gold, or about 59% of the Treasury's total supply, according to the US Mint. Now, with gold trading around $2,940 per ounce, that gives it an approximately value of around 434 billion. This is more expensive, or this is valued higher than Europe's most valuable public traded companies. And with governments around the world getting in more and more debt, they're desperately trying to get more gold. So that's the end of part one of the video. And I want to now get into part two, our next report. So on January 20th, 2025, the future of energy production and the globe experienced a significant shift. Donald Trump's declaration of a national energy emergency on Inauguration Day was designed to expedite approvals for energy infrastructure, including nuclear power. Now, President Trump's pick to head US Energy Department was Chris Wright, and he said he sees nuclear power as part of the domestic energy strategy. Now, right to the north of its border in Saskatchewan, Canada, resides one of the world's most promising uranium jurisdictions, the Athabasca Basin. If Trump's administration is focusing on energy independence and on nuclear energy, this might prompt other countries to pursue similar policies within their own borders, especially if they're blessed with rich deposits. Now, Canada has recently reinforced its commitment to nuclear energy, and this renewed focus encompasses policy endorsements, strategic investments, and technological advancements. In October 2024, the Canadian Nuclear Safety Commission approved an extension for the Pickering Nuclear Generation Station's B units. Plans are in place to develop up to 10,000 megawatts of nuclear energy capacity at Wesleyville in Port Hope. This initiative is projected to create over 10,500 jobs and contribute an estimated $235 billion to Ontario's GDP over the next 95 years. Canada is on track to become one of the world's largest uranium supplier, with uranium output expected to rise by 1/3. Experts project that Canada's national uranium production could double by 2035, ensuring a steady fuel supply for domestic and international nuclear programs. And that's why I want to talk about today's video sponsor, Mustang Energy. That's stock ticker symbol MECPF, which is highly focused on Canada's Athabasca Basin. Because nuclear energy is experiencing a notable resurgence, AI data centers and electrical vehicles are driving up electricity demand. Tech giants are increasingly turning to nuclear energy. Companies like Amazon, Alphabet, and Oracle have invested in small modular reactors, SMR technology. Additionally, Meta announced plans for $10 billion in AI data centers in Louisiana powered by nuclear energy. Now, Canada is on track to become the world's largest uranium producer, potentially. But what's interesting about this entire situation is the uranium spot price is down 36% since its peak, meaning that this is potentially a great time to conduct due diligence on Mustang Energy, because nuclear is the only reliable carbon-free energy source that can meet demand. AI data centers are projected to consume 8 times more energy by 2030. Now let's focus on Mustang Energy, which owns numerous projects in the Athabasca Basin and is planning on drilling in the months ahead. Now, the key projects are Fort Lake, close to major uranium deposits like Cameco's Millennium and Denison's Cryphon and Phoenix deposits. You also have Cigar Lake East and Rough Rider South, located near Cigar Lake Mine, one of the world's highest grade uranium mines. You also have Yellowstone and Yellowstone East, that's close to Cuff Lake Mine, which produced over 62 million pounds of uranium and is located south of Fission Uranium Project that was acquired by Paladin Energy for 789 million USD in December 2024. You have Dutton, which is close to Virgin River Shear Zone, which hosts known high-grade uranium deposits. You have the Spur and the 914W, which is located near Cameco's Key Lake Uranium Mill. So the significance of the Mustang's energy potential lies in the location of these projects in the Athabasca Basin. Again, that's stock ticker symbol MECPF, and their projects are in close proximity to major uranium discoveries. Now, the uranium market is facing a severe supply shortage, with demand vastly outpacing production. Many uranium mines were shut down in the past decade, and new mines take years to develop. And the US relies heavily on foreign uranium, which geopolitically is risky, increasing the need for domestic and allied sources like Canada. So Mustang Energy is a pure play uranium exploration company focused on Canada's Athabasca Basin, one of the world's most valuable uranium regions, according to many. The Athabasca Basin is home to one of the world's largest and highest grade uranium mines, and Mustang Energy owns multiple projects located near these uranium giants. And Mustang Energy is partnered and working with industry leaders such as Aximon Exploration, Dorage Geological Consulting, and Red Cloud Securities, and Sky Harbor Resources. And this is the first uranium company that I'm featuring during the Trump nuclear energy resurgence. So go ahead and start doing your due diligence on Mustang Energy. Again, that's stock ticker symbol MECPF today. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.